Yeah, Bitcoin's down roughly 15% from its highs, which for a hyper-volatile asset is a pretty normal correction, and it is slightly following global liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
So hold on, but you still think it goes all the way down to 70,000, or you think that's the floor, in which case you would still buy at this price?
Yeah, so there's Fibonacci's. So one level would be 70.
Let's say that again.
There's retracement levels. So you pull back from where you rallied.
Right.
So 70 is one level. It could go to as low as the 50s. But that's, again, not a new level. It's just where it touches before it begins to rally.
Okay, let me ask you a different question. For those folks who are watching who are not in Bitcoin or are thinking about buying Bitcoin at these prices, are you saying that this is a fair and good price to get in, or are you saying wait because you think it's going farther down?
You know, Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70. But to me, Bitcoin could be significantly higher this year, you know, maybe 200, 250. So I think 90 is still a good entry point. Correcting now for almost a month, right? 23 trading days. And this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so. And I think that would give that jolt of confidence for markets on top of, I think, earnings, which is going to be a positive catalyst. But for investors in the near term, I think they got to ride out the volatility because I think yields here have made people nervous. Not necessarily deteriorate the long-term outlook, but near term.
Are they smart, the yields, or are they not giving us the correct signal? Because you sound really like you're not sure about the inflation data this week.
I'll have a better sense over the next couple of days as we sort of finalize what our expectations are. But the only hesitation we have is that the hurricanes last year have muddled some of the inflation quality because, for instance, hotel reservations would go up because of these natural disasters, and it's going to happen now with the LA fires, and I think it's going to muddle used car prices as well because you have to replace all these used cars.
So you think if they weren't muddled that inflation isn't that big of a concern? And when you say a turning point in the markets, if we've been down for a month, turning point doesn't mean further weakness. You think we might be making a bottom this week?
Yes, our technician Mark Newton thinks 5,700 might be the turning point. It could happen Wednesday, so maybe 2% down from here, but that's really where the market could make a stand. I think if we could lift the cloud of some of this muddling, in fact, Waller last week even said most of the inflation last year was about imputed prices, meaning the real price of inflation was actually much lower. I think that is still the case. Inflation is weaker when you look at housing, et cetera. So once we can get through that noise. But investors, I think, shouldn't be too glum. I think earnings season is going to be something that really solidifies. Look, if S&P earnings growth is 10%, X energy, and revenue growth 5%, that's a really good reason to be owning equities. Part of, I think, the hesitation for stocks right now is we have a new administration starting.
What? Oh, that's right.
Yes, and we've essentially reversed that rally from November because we rallied 7% over 23 trading days, and now we've given up 5%, and another 2% would just round trip us back to November.
23 trading days.
And you say it's going to lose 90% of its value.
Well, I'm looking back over 10 years, so I have to say exactly what happened, and I want to have fun. But I don't know necessarily about my forecast in the piece, but yeah, I'm on the bubble side on net. To move me off that, you really need not a price change, but a use case. The three uses I've identified for crypto is speculating in crypto, war-torn countries, and paying cyber ransom. When we get a better use case than that, I don't expect this. Again, I'm probably net a bubble guy, but that's more on instinct. That's what could convince me to become maybe more of a crypto person when I find any use for it aside from speculation and criminality.
Leading stablecoin issuer Tether plans to relocate to El Salvador. The firm announced today that it acquired the proper license and that Tether and its subsidiaries are finalizing the formalities needed to make the move. The company says the move would strengthen its focus on emerging markets. The announcement comes as the stablecoin issuer faces some uncertainty around operations in the EU following the implementation of MiCA. Coinbase delisted the token for users in the region over non-compliance concerns. Here in the U.S., stablecoin regulation is seen as a top priority among both industry leaders and lawmakers as a more crypto-friendly Congress takes D.C.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And this is going to be a great fundamental video so you can fully understand what's going on in both Bitcoin and crypto and plus stocks. And when things are turning south, we get a little truth from the mainstream media. And we have Tom Lee from Fundstrat says that Bitcoin is following global liquidity. And we know what that means. The central banks are shrinking liquidity. And inflation numbers come out this week. And the only thing you have to do is get your popcorn, sit back, let it play out. We're going to see how the mainstream media spins the narrative, but we know inflation is still high. And we have Trump coming into office in a few days. And whatever move Trump makes, it will let us know where the market is going, and then also how soon the Fed is going to react to the moves. But the Trump trade, that big pump, guys, is all wiped out. And remember, cryptos and stocks are being ran by an algorithm. And remember, the Crypto Teacher told you. And we have Cliff on CNBC saying that Bitcoin has no utility, crypto has no utility except for illegal activity and gambling. And this is a broken record by the mainstream media. We've heard this too many times. But us in cryptos, you know, I'll go over this every day of all the utility, all these big banks, all these corporations that are using this technology. They're just integrating it into what they're already doing. But of course, the sheep can't see it. And of course, they definitely are not studying the technology. And of course, if you don't understand the technology, you're definitely not going to invest. And remember, the Crypto Teacher told you. And I went over this in the earlier video. Due to regulation coming for these stable coins, we see a lot of chess moves being made, and one of those is Tether moving to El Salvador. And we know the Fed has its fingerprints all over Tether. And remember, the Crypto Teacher told you. Now we have BlackRock's Rick Reader, which we know is not going to give us the whole truth, but he gives us some truth when it comes to these rates. Says they're going to stay high and keep moving up because the Fed is stuck with these job numbers. Well, remember, guys, this is all part of the plan. They want to keep these rates higher for longer, so therefore they destroy this legacy market so the fourth industrial revolution can rise. And this inflation is sticky because of corporate greed. You got a handful of companies that own everything. And remember, the Crypto Teacher told you. Now, when it comes to bonds versus stocks, right now, guys, we know the Fed can manipulate it real fast. Remember when Jerome Powell, at the end of 2023, stated that he was going to lower rates, but waited a whole 9 months, but we saw yield rates plummet. So we know just off his words, they can definitely be manipulated. But we have over $6 trillion sitting on the sidelines in these money market accounts with no risk. So they're getting 5% with no risk. So in the short term, they definitely look good. That's the reason why you have Warren Buffett with over $325 billion sitting on the sidelines. But if you're a trader, you're loving the volatility in the stock market, whether it's going up or down. And remember, the Crypto Teacher told you. Now we have Mike Mayo says that banks can go back to normal. But guys, what he leaves out is that we have Basel III right around the corner. starts July 1st, 2025, and then they have 3 years to comply. And guys, that's lining right up with the fourth industrial revolution. But between that time, 2025 and now, that means that small and medium-sized banks are going to fall by the wayside. Either they're going out of business or they're going to be consolidated. Remember, guys, we're going to real-time liquidity. And I never forget when I first went over to Basel III and I said 2025, it seemed like a long ways away, and now we're here. That's how fast things are moving. And we know time flies, especially when you're older. You have patience. And if you're young, you're listening to this video, just have patience. That's what investing is all about. And that's the famous quote from Warren Buffett. The stock market is a mechanism for transferring wealth from the impatient to the patient. And those who have the NWO book understand. I talked about Bitcoin a long time ago, talked about AI a long time ago. The conscious are 10, 20 years ahead. The unconscious are 10 to 20 years behind. And remember, the crypto teacher told you. And we have the United States and these big economies fighting inflation while China has been manipulating the currency for years and now going through deflation. But guys, over these next 4 years, we're going to be going through hyper deflation and they're going to be going through inflation. It's going to be flip-flop. Remember, we're going to a level playing field. Trump has 4 years to land us in his fourth industrial revolution. And remember, the crypto teacher told you. And again, we have these high rates, strong dollar, and Trump taking office in a few days. And we have a lot of layoffs set up for the second half of 2025, which is going to cause a weak labor market, which is going to allow the Fed to come in and cut. So again, we know in the first quarter, we pull back. At the end of the second quarter, we get these weak job numbers, will allow the Fed to step in, bring back a little of that liquidity, and we start to move up. But again, we're going to have pumps and dumps. It doesn't matter whether it's stocks or cryptos. But it's now time for Trump and the Fed to build this new digital economy. And remember, the crypto teacher told you, because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
So, I mean, the first thing you say, I mean, that employment number on Friday was pretty powerful. And it led to this belief and looking at, when you look at the confluence of data that's come out, you got an economy that's operating at a pretty strong level. We talked about a bunch of times on your show. People want to continue to talk about, well, this is it. The economy's bending down. We've got pressure in different parts of it. And if you look at how the service sector did, again, in hiring, and you look at services generally in the economy, they're doing well. So, you get asked all the time, like, where do you start buying rates here? And I find long-end interest rates still not that interesting. I mean, there is a point that you start adding as you get to around 5% on the 10-year. Maybe you add a little bit. But you got an economy that's operating pretty well, and you've got uncertainty around where inflation is. I mean, the Fed, we're going to get CPI, PPI this week. You're still operating year-on-year core CPI at 3+%. And core PCE, we think, is going to run mid to high 2s for most of the year. Fed's still, in a tough spot. Unless employment starts to soften, you've got rates that aren't going to come down from here of any significant magnitude.
So why is the stock market then having a problem with rates if it's for the right reason?
So I think there's a near-term dynamic, and I think there's an intermediate-term dynamic. So, every time people say, remember it was like if the 10-year gets to 3.75, it's over, 4%. It takes a little bit of digestion. I know we've said it before. This economy is much less interest rate sensitive than ever before. And you look at things like the mag savvy, look at the big tech stocks. They don't borrow. In fact, they're net long cash. But you need to digest this rate dynamic. My sense is we'll go through this period. Rates will stabilize around these levels. I still think the trend is, particularly in long rates, is to move a bit higher still.
Higher than here?
Yeah. So, yeah.
I mean, the 30-year is basically 5%, right? We're at, 480 on the 10.
Yeah.
Are you saying that the 10-year is going to go over 5?
So, first of all, I think the momentum of the 10-year is to move higher than that. Second of all, there isn't a lot of rationale for buying 10-year treasuries today. You get so much yield in the front end of the yield curve. We talked about it on your show for a while. If you think about how 2024 finished, if you're sitting in the front end, you had significantly positive return. The 1 to 3 year part of the index was plus 4%. The back end was negative 4%. what's changed? You still have a relatively flat yield curve. You've got term premiums not enough out the yield curve. So I still think you could have, and you've got a lot of issuance that's going to come. So I still think you could move higher in interest rate. Listen, I think once you get to 5, it is, whether it's optically a ceiling or not, there is some buying that will come in. So I don't think we're going much higher, but listen, I think the gravitation is you still move higher around an economy that's in good shape, and a Fed that can't really go until you get a couple of months of softness in the labor numbers.
So you don't think that the move higher in yields has made bonds attractive enough to be serious competition for stocks? I mean, because that's one of the conversations that's being had now. It's like, well, what was thought to be a really equity-rich environment, well, now you have competition again from bonds and cash.
So it's a question of what bonds. So I mean, to me, and I've said this before, like, people don't realize you can create, and we run portfolios with 2-year duration, very short interest rate exposure, where you're clipping 6.5% yield. Those bonds I love. And by the way, you don't have to stretch in terms of credit quality. Those are great. So you think about what longer bonds are. And if you said, I've got 2 assets I can hold that have long duration, I can own equities or I can own bonds. Bonds, even at 5%, I'm thinking, like, what is my upside downside? So you think about mega cap, they're throwing a 30% return on equity. If I'm going to hold those for 2 years, 3 years, 5 years, and they buy back a huge amount of their stock, so they shrink the denominator of their book equity. So I can own that and compound 30% plus, even with multiples that are not cheap. Or I can own long treasuries. Like, I think what bonds are today is you own shorter term bonds, you clip a bunch of income, marry that to equity. And I still think tech stocks, growth equity makes a ton of sense. So I think the 10-year note's an alternative to buying mega cap? No, I don't think so.
Securities head of large cap bank research. Welcome back. Happy New Year. It's good to see you. You say that the curtain is rising on a, quote, new era for U.S. banks. In what sense?
Welcome to the new era for U.S. banks. We're talking about more free markets, more revenues, more intermediation, more letting banks be banks. The shackles are being taken off, so less regulatory complexity, less focus on just expenses, less marginalization of banks. Do you know, Scott, that loan growth for the last couple of years has been about the worst in the last century? Loan growth on an inflation-adjusted basis has been negative the last couple of years, and a lot of this risk-taking has been done by outside the banking industry. Banks are going to be moving more front and center and letting them act the way they're supposed to.
It's pretty incredible that the global economy right now is more interconnected and intertwined than it has ever been, but major economies around the globe are seeing exactly different situations and backdrops between, and you just underscored that. Look at China. That 300 basis point gap in rates is massive, one of the biggest we've ever seen. And they're actually dealing with 6 straight quarters of deflation, the exact opposite of what we're dealing with now with inflation back on the rise. They haven't had 6 straight quarters of deflation since 1999. So it's a complete opposite situation. They have stimulus now.
They really do, because the momentum clearly is stronger dollar, higher rates right now. But we're going to learn a lot, basically literally 1 week from now, when President-elect Trump becomes President Trump, and we see whether these executive orders that I think have got the market a bit fearful about the inflationary impacts of tariffs and potential immigration restrictions. Let's see if the market is sort of overpricing the negative here. It sort of would be an inverse of buy the rumor, sell the news, if they turn out to be less extreme than the market fears. Pretty similar. I mean, in general, if you have higher rates in the U.S. or higher rates in any currency, it generally helps appreciate that currency because you earn more interest by owning that currency. In this case, also, we got a little bit of a kick on Friday because we learned that the economy, the labor economy, is stronger than we expected. We shouldn't be expecting rate cuts anytime soon necessarily, and that freaked out the stock market to a large extent. The bond market reacted pretty much as it might have, but as you take the rate cut expectations off the table, well, then the dollar seems stronger against other currencies where you have central banks who are more likely to cut rates, such as the ECB or the Bank of England.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leverage to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence.
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.